Alicia Levine joins us now to talk more about all of this, the Fed, the escalating trade tensions with China, and the impact it's having on our markets. She's chief strategist at BNY Mellon Investment Management. Good to see you again. Thanks for joining us tonight.
Nice to see you on this busy day.
A lot to digest, that is for sure. So on the one hand, you have two new rounds of tariffs. On the other hand, you have a Fed chair who hinted that he's ready to cut rates if necessary. Net, good or bad for the stock market today overall?
So overall, the stock market really reacted more to the escalation of the trade fight with China.
Right.
And the fact that not only is China putting tariffs on, but that the U.S. is escalating. The thing I'd say about that is that the Chinese action is really interesting because it is exactly mirroring what the U.S. is doing September 1st and December 15th. And to me, that suggests a negotiating strategy. So the fear that was in the market today should not be unexpected, but investors shouldn't be running out of the market either.
So late today, we did get a ratcheting up of those tariffs by the administration. How do you anticipate China reacting to that Monday morning or late Sunday night?
So things could definitely get worse before they get better. So you could see restrictions on U.S. companies in China. You could see restrictions on joint ventures in China, because ultimately China is running out of goods to tariff because they only import $75 billion from the U.S. So there are other mechanisms where they could make life difficult for U.S. companies. We should expect something. And of course, there's the currency issue. A couple of weeks ago, we had weakening of the Chinese currency, which did send shudders through global markets.
Now, ordinarily, hearing a Fed chair hint that rate cuts are coming would have sent the stock market higher. But as you pointed out, it was the trade tariff tiff that got Wall Street's attention today. But all things being equal, the tariff war could mean lower rates from the Fed down the road. Does that help the stock market or not at this point?
So I think what we heard from Chair Powell today is that the Fed is ready to go 25 basis points in September. And I believe he left the door open for an additional 25 basis points by the end of the year. Absent the trade war, I don't think we would have heard that today. So clearly the deterioration in the global outlook is causing the Fed to become more dovish and to be more open in cutting rates. Ultimately, that will affect stock prices to the positive side and will support stock prices.
Where do you come down on the issue of recession here in the United States? Are we closer than you thought perhaps before or not? There are very divided opinions on that.
That's right. It's actually a great question because the data are really unclear. On the one hand, the consumer data and the labor market continue to be strong. And as we know, the consumer is 70% of the U.S. economy. So as long as Americans keep on shopping, we're fine. On the other hand, some of the forward-looking data, the sentiment data, the intentions for capital expenditures are weakening, and they're starting to look like they're rolling over.
Right.
That does mean that there's a place for the Fed to cut and to help stabilize the economy. And then the other question is whether the manufacturing recession worldwide comes and hits the U.S. economy.
Indeed.
That is an open question.
Alicia Levine with BNY Mellon Investment Management. Again, thanks for joining us. Have a good weekend.
Thank you.